right, what's good, everybody? Happy Thursday. Welcome to our market review. This is designed really for clients, just to kind of give you an update of the markets, but it's open to everybody if you're just kind of wanting to keep track of everything that's going on with the overall stock market. We'll cover all of that. The good, the bad, and the ugly. A lot of good today, actually, by the way, so not much to sort of complain about. We've mentioned before that this time correction is now over. I'll go to the charts here in just a second. We'll talk about that. But basically, lots of good to say today, okay? So I'm going to try to keep this one really short today. Keep in mind that if you're watching live and you want to chat or ask a question, there's a little delay. So if I get a little ahead of you before the question, no worries. And if you ask a question really late, the stream may be over before we actually get to the question. So I don't mean to ignore you. That's just how YouTube has it set up. Let's get started today. So if we go over to the charts, where can we go? Ta-da! There we go. Over to the charts today. Here's the S&P. The S&P was higher on the day by 21. The Nasdaq was higher by 71. And the Dow 30 was up by 293. Mostly in lockstep. Mostly everything was participating with or participating together today. And as we look at the charts, we always talk about the banking stocks and the tech stocks. So today, the banking stocks moved higher towards the upper end of the range, and I'll continue to say that you know, the time correction is over. We kind of talked about how there's moments of price correction, then time correction, where the markets sort of wait for what's likely to happen next. I believe that's over, and now going into tomorrow, that will be the beginning of the markets moving. I don't feel strongly yet that the markets are going to move higher out of here. A lot of it is going to be determined by tomorrow. If there was one day that you could not miss the markets movement, if you're into this stuff, right? If you like tracking all this. If there was one day you don't want to miss, tomorrow will be that day. Here's why. Here's the banking sector today. It was up almost 2%. Now, BlackRock, I believe, was the only one to report earnings today. Not too bad. They didn't do too bad. If you don't know who BlackRock is, they are the world's largest asset manager. Huge. $6.3 trillion they manage. So little old Jazz Wealth over here, we're just, you know, managing a little money for some people, helping people get started. Those guys, $6.3 trillion. That's incredible. Anyways, earnings came in better than expected. Earnings per share and revenue were beyond expected, so the stock was up about 1.5% today. That's not really the big story here. The big story is tomorrow is officially the beginning of earnings season for bank stocks. Today is the start of earnings season, and that's what's going to pull us out of this sort of time correction. So what happens here, you have JP Morgan, Wells Fargo, Citigroup, and then some smaller ones, some smaller banks that will be reporting earnings tomorrow before the markets open. Everyone watches what these banks report, and these three are going to kind of kick things off. Remember, where the banks go and the tech stocks go, so goes the market. So tomorrow, if earnings come in worse than expected or even kind of flat and they take a hit, that's going to pull down the markets. A lot of people expect them to do well. Trading profits for them are expected to be higher. We'll see, right? Tomorrow we'll be able to tell. I'm not going to guess what's going to happen there, but because tomorrow is a big day for the banking stocks, let's look at the charts here, especially for JP Morgan. The stock finished up 2.5% on the day. Wells Fargo, I'm not sure, 1.5%. They're kind of the weaker ones out of the group. And Citi finished up 3%. So tomorrow's going to be a big story for the banking stocks. Did I say that enough? Do you get the idea that tomorrow is a big deal? Delta, the stock was higher today. They reported earnings. The stock added about 3%. The earnings and revenue came in better than expected. The only negative, if you're following along, was that fuel costs were a little bit higher. We kind of know that. If you look at the price of oil lately, here is the actual price of oil on the screen. It's been creeping higher. So although their fuel costs are future, they use futures to hedge their fuel costs, still creeping up prices there. Definitely going to hurt them a little bit. They said their fuel costs were higher by 20%. Let's stick with the fuel section for a moment. Let's do energy. Can we go over to energy? Here is the energy ETF, one of them that you might find in your portfolio here at Jazz Wealth. And notice how, if you've been following us for a couple days, we've been talking about this breaking out of this range. Now, the analogy I would give you is, imagine the effort. Imagine when you go to the beach and your kid wants to bury you in the sand. And right, so this whole time the kid's dumping sand on top of you, just trying to bury you. Your little head's just sticking out, that's all you've got. Takes a lot of effort to get all that sand off of you and get out of the hole that your child dug for you. So what happens is when you get out of that hole, you expend all this energy to get out there, and then you need to take a break. You go, that was a lot of work. So that's the same thing for energy and commodities, right? I'm going to say the same for them. All this effort, all this push and energy used to push itself out of this range, it's normal to see it take a day off, so I have no problems with that. If we go over to commodities, same thing. Look at this pressure building up little by little by little by little, and then explosion out of that range. It's not normal for it to just take off for days and weeks at a time. Little fits and steps along the way, right? So a little pop and then a break, and then a pop and a break. So looking good there on energy. Obviously, a lot of the help today, or a lot of the weakness came in just people taking some of their profits. It seems that President Trump has calmed down a little bit, and so that's not as good of news for oil. I don't think the Syrian sort of issue that's been brewing goes away. I think there's going to be some back and forth days there. So if you're an investor in oil, not a problem. I think it's steady as she goes for now. And so that's about it. That's really all I have for you today. I don't want to make a big deal out of today. It was a good day, but I'm not saying, like, I don't get that feeling that we're off to the races again. And so if you kind of notice how we point out the different feelings in the different sectors and how investors are responding, today was a strong day, but it wasn't one of those days that tells you we're off to new highs again. So we'll see. I think earnings season is going to create a lot more volatility, especially starting tomorrow. So be ready for that. We'll be here, of course, tomorrow to cover you on that, and that's about all I have for you. I'll keep it really simple. Thank you so much for watching. If you're a client of Jazz Wealth, remember, send me your suggestions for the class. We start filming that class next Monday. So we've got 55 plus videos to make, all specific videos for you guys to help you with your personal finances. I mean everything. I'm covering every single base. Wherever a dollar can be spent, saved, or invested, I'm covering every single base. So if you have anything you'd like me to include in that, happy to work with you. We'll make a video for that as well. And we're going to get on it. So I better stop talking. Thanks for watching. Thanks for watching us live if you're here with us live. And we'll be back tomorrow. Have a good day.